ladies and gentlemen, Pelorus Equity Group. We got the president and co-manager from Pelorus, Rob Seacrest. Rob, what's going on? How are you?
Hello, Brent. Good morning. Thanks for having us. We're joining here from the West Coast.
There you go.
Raining here this morning.
Where on the West Coast are you?
We're in Newport Beach, California.
Awesome. Well, enjoy the not sun. We had a couple other California guests who were also saying this is one of the rare days of the year where you don't got sun.
Yeah. Well, great. I'll just get right into it.
Yes, please.
There's a lot to cover here. So Pelorus Equity Group is a value-add lender. We've been doing that type of lending for over 30 years. And we've originated more than $1 billion in transactions for over 5,000 individual transactions. What we decided to do was to go and look at the cannabis sector. I'm gonna just give a little bit of background. So I know that so many people have no familiarity about what we do or the cannabis lending sector out there, but our local congressman is Dana Rohrabacher, and Dana Rohrabacher wrote the most consequential piece of legislation that's been in place since 2014. And that amendment was to defund the Department of Justice from any prosecution of a cannabis-related business in a medically licensed state. And why that's so important is that no matter which executive branch administration is in power, there was no funds to prosecute. And so when that amendment passed in 2014, and it was renewed every year since then with overwhelming bipartisan support, we realized that this was going to be the largest asset class in the country that was newly formed, that just became legal. And now we've identified that asset class as being $50 billion across the country for the real estate portion of it. And so we analyzed that sector. We realized that those properties, whether they're existing or to be built, needed to be repositioned to be built for cannabis use tenants. And so we decided that we were going to start looking at this and seeing if this is something we could use our value add lending skills to do. And in 2016, we originated our first transaction. And since that time, we've originated 55 transactions for over $204 million with 21 payoffs. And today, we're the first dedicated lender to the space. We're also the most experienced for the space. We launched our fund in 2018 that was the exclusive dedicated vehicle for the space. And it was the first private mortgage REIT for cannabis value add lending in the space as well. So we'll talk a little bit about that now. So these are forward-looking statements. There's some disclaimers. I think you guys have all heard them a million times. Just want to give people a sense of the scope of the cannabis opportunity. There's currently 40 states that have legalized cannabis use and 19 for adult use only, including Washington, D.C. and Puerto Rico. What's important to know that as of last year, the estimates were $20 billion in revenue per year. Just $20 billion is larger than the MLB and the NFL combined. So this is not a small sector out there. It's significant, and it's expected to grow to $46 billion in the next 5 years. So there's massive growth. That's from the revenue side, and we're focusing on the real estate sector side. This sector continues to grow, and what was really important is during COVID, not only is cannabis considered a sin business that typically will do better in a real estate or economic downturn, like cigarettes, alcohol, gambling, and those types of businesses. But during COVID, that was proven even more to the point that we were completely unaffected, and all of our borrowers had supply chains and things that were for just cannabis use, which were all deemed essential businesses. So we had the most growth we've ever had during 2019, and we were probably one of the fastest growing funds in the country during that year. So I want to just, I touched earlier on the Rohrabacher-Blumenauer Amendment, which is now called the Rohrabacher-Farr Amendment. It's so important because most people are so focused on these amendments and things that are flying through Congress and the House, which is easy to get it passed, but the Senate is almost impossible to get the 60 votes necessary to get past the filibuster. This legislation that's already in place is the one that people should know about and know it already exists. And something else that some people should know is it's a big misnomer that there's no banking. You can go on FinCEN's website today and see as of December 31st, 2020, there was 684 state banks and credit unions that were offering depositor relations to tier 1 cannabis depositors. Tier 1 is plant touching, which means that they're bringing in actual cash or checks. And tier 2/3 is what we are, which is ancillary to the business, but they still do a deeper dive. And just to give a little bit of granularity to that, any bank is actually eligible to deposit cannabis money. There's a separate suspicious activity report that is issued for cannabis. It's called an MSARS instead of just a SARS report. But the problem is that the banks aren't set up to process those because every single dollar has to be associated with a driver's license at the point of sale. And so the cannabis tier 1 depositing banks have a process set up, and they actually charge typically 0.2% per deposit for the cash deposits, and they have significantly higher monthly fees. Tier 2/3 is what we are. They don't have any difference in fees, just a deeper dive of due diligence when they go through there, when the depositors come in. Just to give a company overview, this is related to the fund. We are a private mortgage REIT, so we've got the tax benefits of the REIT structure, which is saving 20% on your federal income taxes. You only pay state taxes in the state that you're domiciled, and we're able to cleanse UBTI for self-directed investments. And this summary here just kind of shows you we've done 7 states currently in our past. We're closing 2 transactions today that'll go down for a publicly traded company in Arizona and in Nevada. And we've had some pretty amazing growth. Now, we syndicated transactions in 2016, and then we launched the fund in 2018. So the fund was taking a small piece of transactions as we moved, as we were funding transactions. And today, the fund has over 150 million assets under management, and we typically raise $15 to $20 million each month. Our average note rate today is over 15%, and our net IRR to our investors, our target is 15. We've achieved that each full year that we've been in operation. This is just our team, our CEO, myself, and Travis, managing partner. We can come back to that later. I just want to kind of go through a little bit of the loan portfolio and what we're seeing out there. So we started on the West Coast, and that's where we're from, and that's where we syndicated transactions in the beginning. But today we're a national lender, and we're in looking at transactions across all regions of the country that are medically licensed. And in that process, as we've looked at all these transactions, we've aggregated data from 2,000 transactions. Nobody has seen more transactions than us. And out of 2,000 transactions, we've closed 55. And of those 55, 21 of them paid off. So this portfolio balance was as of June 30th. At the time, the fund had 137 million. Average loan size was 4.7 million. Our weighted LTV was just over 50%, and our average note rate was 15.2. It's important to know that our average loan to cost was even less than that. I think it was at 43%, or it was I think it was at 53%. Sorry. And why that's so high, meaning that the borrowers brought in so much money, is almost, I would say that 3/4 to 80% of the properties that we finance are free and clear. And that's because the borrowers didn't have a lending option at the time that they had to get started. They couldn't find it at the time. And so when we step in, we are lending to them to complete or to expand an operation to a experienced operator with a strong sponsor. Just to give you an example of a transaction, this transaction is a borrower called Growpacker. They're a distributor. They're operate out of California, and this particular borrower not only does distribution, but they do packaging, branding, and they also do co-packing for food and beverage. They're actually the largest production facility in the country for bottling. And what's interesting is that this facility has actually been built to pass FDA levels. The individual that runs the company went and got certified himself by the third party that does the FDA certifications, and they're running today at FDA levels, even though the FDA cannot process that. In this particular transaction, what's unique about this sector of lending is that our model was to just lend the borrowers and be secured by the real estate and allow for cannabis use tenants. That's how we're structured. Some of them are owner users, but in some transactions, this one in particular, we were able to get options for warrants in the company. So we have an extra kicker on top of what we've got in just the note rate as well. And so those options for warrants are significant. This company is private. They'll probably head to the public markets in the next 24 months. The one that we're closing today is with a publicly traded company, and we have other ones that are coming through as well. That's not something that we had thought that was going to happen, but the demand for capital is so significant that when there's a compression for time and the borrower needs to get that transaction and needs us to push faster, it's one of the elements that we might use to get more returns for our investors. This other transaction is a company that some of you may have heard of. It's Acrenge Holdings. They're publicly traded. One of the larger MSOs, which is a multi-state operator, is what that acronym stands for. This transaction, again, was owned free and clear. We did a $13.3 million loan on this transaction. They already had about $20 million into it, so $33 million cost basis. We charged them the full note rate day one at 16%, and then we're making disbursements on that as to reimburse the borrower for everything that we verified that has been completed that was part of the scope of work of the budget that we agreed to at the beginning of the project. This project is 41% loan to cost once we're fully deployed. Day one, we had no exposure. So everybody associates our high yields of target rate of 15% IRR to the investors and our high note rate with risk, but that's not the case. It is the dislocation of capital markets out there. And in fact, when we've entered into this space, first we couldn't get our investors to understand it, and we had a difficult time getting them familiar with it. Now we couldn't get our investors to go back to traditional transactions, non-cannabis transactions. So it's completely shifted the other way. Now everybody understands it. They understand the difference in these transactions. And by the way, these borrowers, tenants typically generate 10 to 15 times more revenue per month than a typical borrower. And that could be 1 to 5 million is our some of what the tenants are generating in revenue on our transactions. One of the things that nobody knows and nobody knew when we entered this sector is the cannabis companies have been being tracked by BDS, New Frontiers. These are some names that are tracking taxes and cannabis sales from a cannabis operator side, but nobody was tracking the real estate side. And we needed to have facts to be able to de-risk and mitigate make sure that we had a fact-based decision of what we're doing out there. And so what we did is we aggregated all the information that we'd seen in those 2,000 transactions, and we built our own proprietary database to understand who has licenses in this state, what type of licenses are they, where are they, who are the owners of those real estate, what were the costs of goods, what were the purchase prices for the buildings, for the price per square foot, has there been any properties that have traded on the secondary market? If so, when and for how much? Was it for more or for less? Are there any repositioning of tenants? All of that information, nobody knew that. And so we needed to build that database. And so we built that and gone across the country and built that. And we've kept that internal to understand the market. And we roll all that up into a dashboard to understand what's happening in each of these localized markets within each state. So just talking about some specific loan drivers. We're the most well-known name in the cannabis lending sector in the country. About, I'd say, 60% of our transactions come from brokers, and the other 40% come directly from borrowers. We have a very robust screening process to move through those transactions. We typically see over 500 transactions a year, so our team needs to go through them pretty quickly, and we use that database to kind of scrub that information very quickly to ascertain if this is worth our time. They do the submission, we do the underwriting. We just recently opened up a New York office as well, doubled the size of our underwriting team. For the appraisal and budget construction, we originate all of the appraisals ourselves. We underwrite off of a cost basis. We do look at loan to value on as is and fully stabilized for both for cannabis use and alternative use. But cost, we believe, is the most true metric to understanding this, to understanding where understanding the risk on the transaction from a loan to cost basis. So there's about 100 lenders currently in the cannabis lending space. Mostly private lenders. There are banks, as I mentioned earlier, including our bank is lending directly. There's a publicly traded bank lending directly. A lot of regional state banks and credit unions are lending in their areas. They're only lending typically on fully stabilized transactions, and they're certainly not capable of doing value add lending in the way that we are. And prior to entering the cannabis sector, we had already refined our processes for doing draws and value add lending. And we realized that time is one of the big killers for projects because you're burning, the payment costs you money each month. And, you want to shorten that sales cycle as quickly as possible for a lot of for transactions. And so we've refined that process to getting the approval of a completed draw once it's submitted to us and we've received the completed draw. From once we receive that, we can do the inspection, on-site inspection, review, and approval and wire within 3 days. That is so significant because we are able to continue the flow to reimburse our borrowers the money that they advance or their contractors advance so quickly that it allows the project to get completed. And we've estimated and run case studies that that's typically on average 40% faster. And that's why Acrenge Holdings came to us as opposed to go to an institutional lender. Brett, I see you there. Are we getting close to the
Hey,
end?
it's me. We're getting close to the end. I want to have a little bit of time for questions. I think I got some good questions. Audience has some good questions. So if you want to do like a quick wrap or if you're ready for questions.
Let's just go to the questions because I think that's the most informative.
Yeah. Awesome. I like it. I like it. So, you mentioned warehouses for growing, you mentioned packaging. There's obviously dispensing, distribution. Are there any other types of like businesses / tasks along the cannabis chain that make up your holdings and that make up, real estate? And how is that going to change moving forward?
So for us, we only focus on indoor. We only do commercial buildings. So we don't do any outdoor stuff. And because we're a value add lender and our budgets are enormous, tens of millions of dollars on a lot of these projects, those are typically going to be indoor cultivation that have perpetual crops that are going all year round. And that is those crops are being harvested for a specific either owner user client or clients that must have product coming through regardless of fire, flood or whatever it might be, or mold or contamination. So most of our indoor cultivation, but we do have everything in the chain. The dispensaries have the most alternative financing in banks. Those ones have very low budgets and are easy to underwrite.
Gotcha. Okay. And no real plans to, change that makeup, I guess, moving forward, right?
Not that I'm ready to announce here. Maybe by Friday.
Got close. I was looking for something like that. I gotcha. A couple questions from the chat here. I sort of worked with this question a little bit. Do you have any recommendations as to where interested parties can find out more about laws with the industries as they apply to employees and future employees?
So that only applies to cannabis operators, and we're ancillary to it, so we're not as familiar. But
I got you.
I would use Denton's law firm that's who we use, the 5th largest law firm in the world, the top tier law firm that is in the cannabis sector.
Okay, cool. And then a couple questions more one question more about Pelorus. A chatter said 100,000 minimum to invest. Any change to that moving forward?
We are going to be increasing that. We're averaging raising 15 to 20 million a month, which is 100 to 150 new investors or increases per month. And we got to actually slow down the velocity of processing paperwork.
Gotcha.
For the rest of this month, it's 100,000. If you're going to invest an initial investment of less than that, but your intention is to get to 100,000, send us an email. We can discuss that on a case by case.
All right, one more really quick one here. I thought it was a good question, so I wanted to ask it. How does the legality of cannabis affect your cash position? I guess as more states go toward legalization, how does that affect your spending and your cash holdings?
So we're in an FDIC insured bank. Everything that we've done is completely legitimate. We don't accept any cash payments. We're not even plant touching in any form. We're lending to the owners of buildings, and we're simply allowing the tenants of our borrowers to be cannabis use licensed, regulated cannabis use tenants, and they're in full compliance with the state. And then you've got the Rohrabacher-Blumenauer amendment that has protected our tenants from prosecution from the feds.
Gotcha. Okay, awesome. Thanks for answering those quick questions, Rob. Sure. It was a pleasure having you on. President at Pelorus Equity Group. That's Rob Seacrest. Thank you, sir.
Thank you so much.